Whether you're a first-time buyer, investor, you own a home and want to buy a new home, there are a lot of major decisions to make. One of the most important is arranging a mortgage and financing. Here to tell us more about mortgages is mortgage agent and principal broker of the Mortgage Center, LucyGagliardi and RoyCocciollo. Thank you so much for being here. So Roy, tell us, how did you start in the business? You have your own business, you've been on TV. How did you start and what did you do before that?
Well, the truth is I kind of started in this industry a little bit by accident. I actually worked overseas for 4 years in Asia. I came back and I really couldn't find a job. So my brother actually was working at CIBC at the time, and I went to a networking event. I got to meet a few people there who really liked me and thought they'd give me a chance getting in the mortgage industry, and I worked for a big bank, which was CIBC at the time. I was there for about a year, and then I got hired at Canada Trust. This is how long ago it was, before TV bought the boat. And then they had a bit of a hiring freeze, so I became friends with a broker who I used to send my business to at the time, and I got an interview with his boss. And I started out as being a mortgage broker back in 1999. So it's been about 16 years now.
Really?
And I was a regular guest on a popular TV show on CP24 with Dan Romer.
Yes.
I was a regular guest for about 6 years.
Yes.
And I also worked with Monster Mortgage for 9 years. And last year I opened my own franchise called YourMortgageYourWay.ca with the Mortgage Center. And that's what I've been doing ever since.
Beautiful, beautiful.
Thank you.
So what makes one broker more successful over another mortgage broker?
Well, there's a couple of things I think. With anything, first of all, everyone knows that the harder you work, the more money you can make. And also you have to remember also a bit, another thing is likability. A lot of people want to be able to build a relationship with the person who's making the biggest financial decision. And no matter how you look at it, if you're buying a home, 90% of us need money to fund that, and that comes through a mortgage. So you have to make sure you have somebody who's not only going to give you great advice, but is going to spend the time to make sure they get the right mortgage product for you, and spend the time to make sure that they understand every stage that you're in your life. That way, the cost of your mortgage or the life will be the least amount as possible.
What makes your company different than another company?
Well, the thing is, we all have the same tools. Every mortgage broker you have, they all have the same tools. You have the same lenders, the same guidelines, the same rates. But most times, it's the amount of service you give to somebody. So, in our case, we like to meet with every client in advance to find out what their situation, and no matter how you look at it, anytime you go at a mortgage, if the person, whether it's a banker or another mortgage broker, can't give you an hour of his day to go over your situation and find the proper mortgage product for you, I'd say run.
Yes. Yes.
Definitely run away, because it's a big decision, and over the life of your mortgage, you want to make sure it costs you the least amount. Not just about rate, but also about the product that you need for your mortgage and your situation.
Right, right. And you make house calls too.
We have house calls. They can come to our office at any time. We have plenty of locations downtown Core, and we're completely mobile. We have a team of people who will be more than happy to take some time out of there to come down and invest with you to make sure you get the right decisions.
I just have another question now that you've talked about rates. Where do you see rates going, mortgage rates? Do you see them?
Well, if you want to look at
anytime soon?
well, there's a couple of things, and well, if you understand, there's two parts of mortgage rate. There's a variable rate that's based on the overnight lending rate that the Bank of Canada sets, and then there's a long-term rates which are based on the bond yields. The bond yields have been quite volatile because a lot of people are selling the bonds off to get into the stock market, which raises rates a little bit, but overall there's no indicators whatsoever that rates are going up. Our economy is pretty stagnant. There's not a huge growth. Employment's stable. The only thing is right now is the housing market is a very short supply of product out there, and that's what's pushing the prices up. But we have tons of immigration, we have great stability here, and a lot of people like our country because it is a safe haven for people with money. There's no corruption, we have great banking institutions, and that's why people love to come to Toronto and to Canada and move here.
That's great. Lucy, you're a mortgage agent with the Mortgage Center. Tell us a little bit about your background and how you got started as a mortgage agent.
So I've been in the financial industry for a little over 20 years. I'm aging myself now.
You only look 20.
Oh, gee, thank you. But so yeah, I started with the banks. Started right from the bottom as a teller and moved up to various positions. So I had 2 small children at the time. They're quite a bit older right now. So I just felt that it was, I wanted to put my career on hold for a little while to be with them a little bit. So I did, you know, my straight 9 to 5. And about 3 years ago, I decided they were old enough and most definitely responsible enough for me to do exactly what I'd like to do. I haven't looked back since.
And have you always been with Roy?
I haven't always been with Roy, but you can see why I am now.
Because he's good looking?
No, all kidding aside, no.
Okay, well tell us, why do you think people should use a mortgage agent instead of a bank?
So when you go to your bank, essentially, you're going to RBC or you're going to TD or CIBC for that matter, they essentially have your 4, 5, 6 different mortgage products. With a mortgage agent, we deal with upwards of 20 different lenders, which each have 4, 5, 6 different products. So there's basically more of a variety, definitely more options that you can look at, or you can choose from with respect to terms and rates, essentially.
What would be some of the challenges that people would run into when they're going for a mortgage?
So one of the main challenges is really their credit blemishes. Sometimes there's a credit blemish, but we'll have a conversation on that a little later on in the segment. But
like a bad credit.
Sluggish credit, yeah. So another thing would be the amount of debt that somebody carries.
Yeah.
So if we're looking at it from the perspective of a pie, the pie being your annual income, your debt shouldn't be more than 44% of your income. If it becomes more than that, it becomes a little bit more challenging to get a mortgage. So when I say debt, your debt can consist of your mortgage, your taxes, car loans, lines of credit, credit cards, that sort of thing. So there are certainly options, not as many options as if you're, within the 40-44% range, but sometimes there's options with alternate lenders.
Okay, well, and now that you touched the topic, let's talk about people that are credit challenged or have that blemish. Can a purchaser buy a home if they have that credit or a credit challenge?
I think you have to look at 3 things. There's 3 things you actually need in life when you you need cash or you need credit. So at the end of the day, if you don't have good credit, you better have a lot of cash on hand to make sure you have quite a large down payment. There is option for people with credit challenges, and depending on what the credit challenge is. Some are bankrupt, who are recently bankrupt, or ex-bankrupts, or people with 2 proposals. And you see those guys that just are lazy, don't like to pay their bills on time. So depending on what their situation is, going to be depending on the worse your credit is, the more money you need to put into that. So I'm not saying that you cannot get a mortgage, but you're going to have to change your perspective on what kind of mortgage you can get. And that's also going to change with only the amount of money you put down, but also the pricing of the mortgage. You're going to pay more for that because they look at it as a higher risk. You may have more fees associated with that. And another big thing too is the fact that now with the regulation that's changed from the B20 to B21 they introduced, most banking institutions have a cutoff of 650 as a beacon score. So you have to keep your credit up, and if you don't know how to do that, I suggest you contact somebody. Make sure you pull your credit from Equifax on a regular basis to make sure there's no fraud, that you're not missing payments. But it's really important to keep your credit relatively clean, and not just pay your bills on time, but keep that. Let's say, for example, that if I have a $10,000 line of credit, you want to keep that 75% of the limit to keep your credit score above 650.
Okay, yeah, that's good. I was going to ask Lucy how to improve that, but I guess that's how you can do it. Take out a credit card, start showing that you can pay, and
But also make sure your debt, the capacity of your debt compared to the credit you have available to you has to be at least 75%. You don't want it creeping up that way, because as soon as you get to that spot, that'll start decreasing your beacon score, even though you always pay your bills on time. So I've seen people with lots of good credit, but a very low beacon score because they carry a lot of debt close to the maximum of what their capacity is.
I see. Okay, so there's hope. There's hope for people.
There's always hope.
There's always hope.
Absolutely.
Lucy, why is it important for a client to get pre-approval before going out with an agent to look for a house?
They can get it before. They can oftentimes, I have agents that actually call me and say, can you pre-approve my client? Yeah. The importance of that is really, you'll gauge exactly what the client can afford. There's nothing worse than falling in love with this beautiful home and you can't afford it. It makes the job a lot more difficult for the the realtor, and then the client becomes disappointed. It's no longer a positive experience for the client at that point.
Yes, yes, right.
Just to add to something, especially in this environment with multiple offers,
yes,
it's not just important to get a pre-approval, but you should sit down with your mortgage professional and actually go through the whole steps like you're actually purchasing this home. Because what's happening is it's multiple offers, you have no choice but to go in there with very little or no conditions. So it's really important that people understand that they can't just get pre-approval. If someone goes on the phone, gives you information, in 5 minutes you're pre-qualified, and then now in this day and age, in this environment, it doesn't cut it. You actually just sit down with somebody and make sure that you go through every situation and make sure that no matter what, you can qualify for that.
So when a client's calling you and saying, I'm in a bidding war and I want to take out the condition on financing, can I take it out? And what do you do?
So what we do is we ask the client to send over the listing and what the maximum purchase price they want to offer on this. We do a little bit of research. We call some appraisers. We talk to other agents to see what the value of the house is close to, is approximate, because we can't tell what the appraised value is going to be when it's done. We want to get as close to that number as possible and make sure that they do qualify for that purchase price for that house, and also make sure if they need a backup plan, we have one ready for them just in case they go to the bank, they approve them, but they say, you bought for $800, it's only worth $750.
Yeah.
What do you do with that $50,000? You want to make sure you have a plan for that just in case.
Yeah, right. That's very good. It's good to know. Let's talk about the new mortgage regulations and qualifications that have come into effect in the last couple of years. Do anyone of you two want to start and tell us what's the new?
So they came up with the B20 after the 2008 market crash. The regulators, which is, I didn't say fiscal, it's not, it's OSFI. They regulate all the big banking institutions. So they went to all the lenders and said, hey, you guys want to do mortgages, we want to know what kind of mortgage you're doing and what your guidelines are. So every lending institution had to give them a booklet saying, these are our parameters, this is all we're going to do. And then you can't step outside that box. Okay? And then also decided to come up with B21 rules where they're going to change a few other things. So now if you look at the insurance,
qualify for a mortgage now, right?
it is much more, well,
Like Lucy was saying.
it's not just more difficult, but the process itself can be quite overwhelming, because before they ask for an employment letter and a pay stub, and they're okay, that's fine. But now it's like, I want an employment letter, a pay stub, a T4, 2 years notice of assessments to find out what your average income is.
Yeah.
We want to know all the details of your financial status. We want to know what kind of car you're driving, what year it is. We want to know if you have RSPs, where are they, what are the actual values. Beforehand, it was a bit of a guessing game, I guess, and as long as you're close, nobody cared. But now the new rules are very, very particular on the information that you give.
Right, and if you're buying an investment property, it's a bit more difficult, right? I think you have to put 35% down.
Well, there's a couple of things. With investment properties, depending on how you qualify it. Okay. The regulation, if you want to call it, or the guideline is you have to put a minimum 20% down in order to qualify for a purchase of an investment property.
Yeah.
But then it is, are you a qualified investor, which means with your income, you actually qualify with that, with the rental income, or are you a professional investor where you get most of your income from rental, and then you have your non-qualified, which are self-employed people, real estate agents who don't fit in the box, then that's a different one as well. So it could be, yes, you qualify with 20% down, or you have to put as much as 35%.
Right. Okay, Lucy, when you're going through a life change like separation, divorce, or just recently widowed, is it harder to get a mortgage?
It's not necessarily harder. It essentially depends on a number of factors. When you're, God forbid somebody passes away or one of the parties pass away, I would hope that you have some sort of life insurance that will help cover the mortgage in a circumstance like that. I strongly recommend, there's different forms of insurance, but I definitely strongly recommend that. In terms of a separation or a divorce, that really depends on whether or not the separation is amicable. If it's amicable, everybody's paying the bills, it's no longer an issue.
Yeah.
It's when one party doesn't believe they may be responsible for a particular debt, they don't pay it, and when there's animosity between two parties is when, bills don't get paid, credit becomes, a little bruised, and that's when it becomes a little bit more challenging. But it's not necessarily the case that you won't get a mortgage. You're just qualified under different.
So in these cases, is mortgage protection, mortgage insurance, is that important?
Definitely.
Yeah.
Definitely.
Definitely.
There's different, once again, different types of insurances that you can get. There's life insurance, there's creditor insurance, there's critical illness insurance as well as disability insurance. So definitely recommend to protect your asset. Yeah.
Okay, is there one tip that you each want to leave us before we go?
Go first, Lucy.
You want me to go first? No, I'll go first. So one tip, really just keep your credit up there. Like Roy said, keep your balances below the 75% mark, and make your payments on time. Set them up through online banking if that's something that's easier, but that's what I do.
Are rates competitive? I wanted to ask you that about mortgage rates because they're a big thing right now.
Yeah, you know, and when I first started, and I'm going to age myself, but when I first started back in the day, if you got 25% discount on posted rate, you're like a hero. You had to be like huge net worth. There's no way. And now it just seems like mortgage has become more of a commodity, and everyone's got to race down to the bottom. The cheapest rate isn't necessarily the best mortgage for you. I think the key thing, and a tip I have for somebody, is it's the biggest financial decision you're going to make in your life. It's the biggest investment you're going to make. Take the time to understand what your situation is, what you need, and get the product that's appropriate for you. Because at the end of the day, you may find the cheapest rate will end up costing you the most amount of money if anything ever happens.
Good.
And that's one thing that you understand.
Very good. Thank you. So where can you both be reached? Lucy?
Go ahead, Lucy.
Ladies first, right?
Ladies first.
Ladies first.
My
Same
website.
place, I think.
My website is www.LucyGagliardi.ca, and I can be reached by phone as well at 647-888-1210.
And you can visit our company website. It's YourMortgageYourWay.ca. And my numbers are there, but you can reach me anytime at 416-640-0930. And we're right here in the GTA, so come on by, and we'll be more than happy to talk to you. Thank you very much,
Thank
Carmela.
you so
Thanks
much.
for inviting me.